Most income investors see a high yield and immediately think one thing: how much can this pay me? But that's the wrong question, because what actually matters is what happens to your portfolio over time, how reinvesting versus taking income changes your outcome, and whether the income is coming at the cost of your principal. So in this video, I went all in on the STRC with $525,000 in the portfolio and tested three real world strategies: full drip, 50% drip, and taking 100% of the income in cash. And I'll show you what your monthly income would actually look like, how your portfolio value changes over time, and which strategy gives you the best balance of income and sustainability, because the numbers are here. And this might completely change how you think about high yield ETFs. So stay tuned. Welcome back to Simply Money. Today we're doing our all-in scenario with STRC. If you're into Bitcoin, this is one you want to stay tuned and watch. What we have going on is our spreadsheet. This is the STRC drip spreadsheet. If you'd like a copy of this, you can get it down below at the Buy Me a Coffee link in the description below. Now, what we do on this, for those who are new, we take the inception date, what the price is. This is monthly paying, and here's the ticker symbol STRC. This shows us how many shares we're able to buy with our $525,000 portfolio. For those that are new to the channel, the reason we do the $525,000 is because last year sometimes somebody asked me to do that with my income portfolio. They asked what would happen if you had gone all in on a fund. So we ran those numbers, and this series has taken off from there. It's got a lot of feedback, and people start submitting what tickers they want to see me run this on. And so we keep with the 525,000 so you can look at one video and another and get a better comparison. If you bought this sheet, you can change the date of when you're comparing. Maybe you bought it in November and you want to start then, and you started with 5,000. You can put that here. There's a couple things we'll look at after on calculators. This has that you can change things. Now, just starting out, STRC has very little data. It is less than a year old. So with all funds that have minimal data, please take that in consideration. Whether it's negative or positive, it is such a short period, we don't know what it's going to do over long periods of different cycles of the market. So keep that in mind. And remember, this is not financial advice. This is for informational and educational purposes only. With STRC, we have our rundown, how many shares we started with. Starting in July, we see it was at $89.95, and we have, watching this going up, it's at a nice little increase. Went down a little bit in March and April here, but it's still up from the beginning. We're up in this time frame 10.56% in less than a year. So far, again, this has been really strong, been doing well, and we like to see that. We also have the distributions. We can see that those started at 80 cents in August, and each month they have gone up consistently, slightly. We have not had a down month yet. Again, we don't know. This price could start going down, and we could see that starting to drop drastically. Something to watch and monitor as we move forward. But for an early fund, those are two signs we like seeing out of the gate, that it didn't just take off in the first month or two and then come back down as things settled. It's continued to do well and maintained a nice return and an average of 89 cents per share distribution. The last distributions have been 95 cents, so that's good to see. Our first scenario we're going to do is this column D here is our full drip. When we get the distribution, we take the 80 cents multiplied by the number of shares that we have, 5837, which paid out $4,669. We buy more shares, and we show that right here in this column, and you see that we're now up to 5,885 shares. And then next month, you get an 83-cent distribution, so that's a $4,900 payment. You buy more shares. As we continue down, as the dividend is going up and you're gaining shares, we've gone from $46.69 up to $6,007 per month. It's a nice little increase that's happened there. We're seeing the increase in our monthly income. In this short period of time, it's paid out $48,000. Again, you haven't received this, it's just been reinvested, but you've gained 493 shares in this period of time. And that's what we like seeing. And then using drip, that's what you're doing is you're accumulating more shares. And then people will turn off the drip, or maybe they'll turn the drip off and reinvest some of the income. Just depends. A lot of people will take the income and then reinvest it when they have slight down draws. Maybe it pulled back. We're seeing the monthly price here, but during the month, there may have been some times, and I'm sure there was if we pulled up the chart, where it had dipped. And maybe that's when they deploy the income. They have different parameters they set. Everyone deals with it a little bit different. How do you deal with your distributions? Share it in the comments below. Do you reinvest automatically? Do you use the income? Or do you deploy it into another position? Or do you hold it until you find a price mark where you want to buy to bring your costs down? Those are things I'd like to hear from the community in the comments below. Share those with everybody. Now, our second scenario here is 50% drip. This is saying we're taking the amount distributed, we're going to reinvest half of it, and we're going to live on half of it or use it somewhere else, but we're not buying more of STRC. With that, this column here shows you what half of the distribution is. You get this amount twice. We're going to take the 2334 and we're reinvesting it into more shares right here in column H. We're also getting 2334 as income. So you get this amount 2 times. And in this scenario, you can see you're still increasing your income from 2334 up to 2898, while also adding 242 more shares to your portfolio. By doing this, you've received $21,000 in cash and increased your portfolio holdings. And that is a nice way to approach that. And we'll see what the total returns on these are here in a moment. Now, the third scenario is zero drip. It means we're taking the income for those people who are retired or they're using this to fund another position. They put the investment in and then they take the full distribution. So you can see the first distribution, all 3 of these will be exactly 46.69. With full drip, you're reinvesting it. With zero drip, you're taking it as cash. So you're not going to be adding more shares. So each of these payments are against 5,837 shares versus the full drip, you're adding more shares. You're still getting a pay raise here because in this short period of time, the distributions have gone up. You're seeing your distributions go from 46.69 up to the latest of 55.93. That's still nice while you're taking the income and seeing your income increase month over month. Again, you're going to have some downturns and pullbacks, and this will probably go down. And the longer this fund is around, we'll see that and we'll monitor it. We'll revisit this fund again another time after we get more data and see how it's doing. With that, I want to pull you over here. We're going to skip a couple things. We're going to come over to column L. You can see what's happening. It started out paying a 9.86% yield. This distribution of 80 cents, if you multiply that by 12 and divide it by your share price, that gives you a just under 10% distribution rate. As they've increased the distribution and the price has gone up some, they've actually increased the distribution slightly more. Where our latest couple months were at 11.5%. And so the yield is increasing, which is nice to see. And we'll monitor that as well. What happens with your portfolio? Now, with the full drip, we had the $48,000 we reinvested. So our portfolio has grown by $104,000. A total return of 19.9%. With the 50% drip, we received just under $21,000 in cash, and we reinvested $21,000. Our portfolio balance, our unrealized gains, are $79,000 increase, which is a 15% return, but not total return. We're going to look at total return here in a moment. And then your zero drip, you receive almost $47,000 in cash, and your portfolio gained 10.5% for $55,000 unrealized gain. Let's look at our full return. Our total return with the full drip is the 19.9% because it's your total portfolio compared to what it was when you started. And that's 19, just under 20% total return. Now, taking cash, $21,000, and you gained $80,000 in your value on the 50/50 drip, your total return is 19.14%. And our zero drip, we received $47,000 in cash and we received $55,000 of growth. We had a 19.49% return on this scenario. So all three of these did fantastic, over 19% return on any scenario you did, whether you were building up your shares, building up some and taking some income, or totally taking the income. You did very well total income wise. Now I want to bring you over here to a couple features we have on these spreadsheets. Again, this doesn't have a lot of data, but on this spreadsheet here, the first calculator, you can put in the percentage that you want to drip. And for those that aren't familiar with this, you can actually go in and say, okay, I want to drip 15%. What you would have to do is take the full distribution and then take 15% of it and reinvest it manually. We just set this up this way so you can decide how much would I want to drip to build up some shares and how much income would I get. And you can change that from anywhere from 1% to 99% and see how it does. And you can see here that you still gain value, you gain income, and that is a positive. Again, short time frame, so not a lot to go on here. Now, this one here, this calculator is the one a lot of people like is because you can put your dollar calculator where you put the amount you want to keep out. Say I just want $500 a month. Maybe I need to make a car note off of this. And so I'm paying myself $500 a month and everything else is reinvested. So this first month, because there was no distribution, you actually had to sell a couple shares, which is no big deal. The calculator just does that. And you get the $500 a month of income. And then the rest of the time, you're buying more shares. And so you see what your value increase is, how much cash you took out. Perhaps you say, okay, I need to make my mortgage payment on this. My mortgage is $2,000. And so I'm going to take $2,000 out and I have that money coming out. And then this is what's being reinvested. And again, you can change however much you invested in this fund if you are invested, and change this around to whatever suits your needs and how you want to play with that. But those are the different things you can do. That's STRC. So far, so good. In my opinion, it's done well. But as you know, crypto is extremely volatile. This has done well in the short term. We're going to see some bumps, some big ups, and we're going to see some big downs. What's your projection on STRC in the near future? Leave me some comments down below and leave that feedback. Thank you for joining me today. Don't forget to hit that like and subscribe button. We'll see you next time on Simply Money.